take in a position that has a limited risk, and then I still have the potential to earn higher income. I don't want to enter a position where my gains are limited and I still carry a lot of risk.
Right. And yet when it comes to the stock market, a lot of times what we get talked into is this idea of limiting our upside potential, taking on an obligation that says, hey, we have to deliver this stock at this price, and we think it's a winner. The covered call trade, this symbol that I'm showing her, this logo, this chart that I'm showing here, isn't mine. I didn't make this. I pulled it right off of Options Express. Okay, and most folks would agree that when you buy stock, if you're mixing it with any other option, okay, if you buy stock, you're still bullish, right?
That's correct. Yes.
Right. Okay. And now, what if it turns out that you're right, and your stock doubles, or it goes to 50% higher, or even just 20% higher? When you sell a covered call, do you get to participate in that?
No, you don't. You get called away at the lower price, Kurt.
Right. On the other hand, if she crashes, if you turn out to be wrong, do you get to participate in that?
Yes, you do. And that's where the sorting machine aspect comes into play.
That's right. It seems kind of backwards, You're sorting out your winners and hanging on to your losers. Well, Mike, I just had this crazy idea, maybe we should do it the other way around. Okay? Let's go ahead and click this screen a couple times. We'll rapid fire through this, okay, because this is my story, okay? And I don't want to get too deep into it, but here's the deal, Mike. Just all I did was follow directions, and by following directions, what he said was, hey, if you want to really do well, buy your stock on margin because it'll double your return. So I bought stock on margin. I sold calls against, and I was using a search engine to find the highest paying premiums, and that happened to be in pharmaceutical companies, okay? And so I did. I found a really good one. Let's go ahead and click. Found a really good one called LiPo. And I bought LiPo at $17 a share, and would you believe that this was in May, would you believe that the June $20 call was selling at $3?
Looks very volatile.
This is good.
Mm-hmm.
Yeah, but again, I had been taught to expect, these. Actually, they weren't saying 3 to 6% back then. They were saying 4 to 10% returns per month. And here I found one that looked even better. I was going to definitely get called out at $20, right? So I bought at 17, sold a $3 call. If she goes up to $20, and I make $6, $3 on the call and $3 on the capital appreciation, right?
Mm-hmm.
Oh yeah, sure. Okay, but then LiPo missed its FDA approval, and the stock opens at under $9 a share and starts heading down from there in huge volume. Everybody's getting out at once. Okay, so my broker Mike calls me. Okay, and it's not Mike Chupka. Okay. But his name is Mike. He gives me a call and says, look, Kurt, we need you to come in with some more money. We need to come into a margin call. And what do I want to do? Now here's the deal. Mike, I had gotten overconfident because the several months leading up to this, I had made money doing cover calls, and it always turned out. It always worked out.
Mm-hmm.
And so I had sunk everything that I had into this trade. I couldn't tell him that I didn't have any cash because in the first place, I kind of stretched the truth a little bit to get this full-service broker to allow me to do, risky trades like this on pharmaceutical companies. I finally said, look, sell, just get whatever you can for it, like he was some kind of salesman, he could maybe get a higher price.
Mm-hmm.
Shows you how much I understood back then. He says, Kurt, I can't place an order like that. Do you want a limit order? And I said, well, yeah. Let's go 8.5 because it had been trading at 8 3/4. I said, okay, sell it all at 8.5. And then just as he's entering that order, this is what happens. He says, nope, you want 8 3/16, so I might be able to get that for you. I'm like, wow, what's going on? And we kept placing limit orders, and the price kept blowing down, down, down. And finally, I ended up placing a market order. Which was essentially when you place a market order, it's just a You know, it's basically bend you over and give you whatever they feel like. I ended up losing everything, Mike. All but $400 of my life savings was completely gone. And I'm kind of reliving it right now. My voice is starting to shake here because, you know, I don't know. I think I'd rather take a physical beating than take a beating like I had in the market here. Okay? And to add insult to injury, just a few months later, LiPo is back up to full strength. Okay? In fact, it was actually higher than where I bought it. It was just a few months. If I had made that margin call, I would have not only kept my profit, okay, I would have gone above, I would have done better than just that cover call trade, okay? But the thing is, I couldn't possibly know the future, and also, Mike, I didn't have the capital. I just didn't have the leverage. See, leverage had been used against me. And so, Mike, after this, I decided that I had ignored the one thing that I teach all of my martial arts students, okay? The very first thing that they learn in class is how to keep their hands up, how to stay protected. Because after all, it's not necessarily the guy that can strike the most terrible blow that wins in a mixed martial arts match or in a street fight. It's the guy that can take the most punishment and still be smiling. And I got this weird idea. Let's click that screen. I got this weird idea that maybe this high right up. So instead of having all the risk on the downside and a limited return, maybe we could go the other way around. You see, Mike, it's still the same expectation, isn't it? I'm still bullish when I buy stock.
Yes, we are.
When I buy a put to go along with it, it makes it safer. Okay, but here the reward is unlimited. And again, this isn't my decal. This isn't my logo or chart. This is what I pulled right off of the education site at Power Option. I'm sorry, at Options Express. Okay. And it's well known that this protective put option is a very good way to leave your upside open and yet put a floor underneath your feet. Okay, now what's the objection usually, Mike? What's the objection to doing a protective put trade?
Well, when you first described the way that you were setting up your position to me, I told you that you were putting too much money into the position. You're buying too much insurance, and you have a low probability of ever earning a return because the stock's going to need to go up 10, 15, or 20% before you even realize a profit. I didn't see the point.
Right. And later on, of course, you did see the point when I invited you to a webinar. And that particular webinar, I think I showed like 3 different income methods and some message spread trades and some really complex stuff that we're not going to go into today. But you were sophisticated enough, you could pick it up, right? I mean, you looked at it and said, wait a minute, you can make money.
And we will show, later on we will show what we promised with the adjustments I made on the silver wheaten trade as well. That are fairly simple. They're not that complicated, but they can be done, and you can earn extra profit, of course, on the position.
That's right. Will you have the capability? Can we jump out of this later on and get into Power Options? Good.
No,
okay,
I have it. I'm sorry, I have it set up in slides, Kurt. We won't be needing to use Power Options to show that. We'll just show it on the slide presentations toward the end. Even
better. Even better. Okay, great. Okay, well, Mike, let's take a look at how to fix this problem. Okay, I had gone broke mixing options and stock the wrong way. For example, buying stock and then selling a call against got me hurt. And by October 2002, I began to mix them the right way. I would buy stock and also buy a put option and use that put option to limit my risk to very, very small amounts. I bought into Yahoo and eBay and Amazon. There's a company that's not in business anymore called Overture.